You're listening to Real Investor Radio with Craig Fuhr and Jack Bevere, where we cover advanced real estate investing topics to help you stay ahead of the curve in your real estate investing business. Hey, welcome back, everyone, to Real Investor Radio. I'm Craig Fuhr, joined again by Jack Bevere. Jack, good to see you.
Absolutely, sir. Good morning.
Hey, we're just doing some quick hits today, Jack. You sent me an article a couple days ago, or I'm sorry, an email a couple days ago with sort of an update from around the country on legislatures that are passing or trying to pass laws against large operators, Jack. As we know, you don't have to be the most informed guy in the world to understand that we have, Wall Street in the business of owning houses these days. And while that still, Jack, the total number of houses owned by Wall Street is still in aggregate, a very, low percentage of the overall, housing stock. I think there are a lot of, we've got, Jack, we've got California here, we've got Minnesota, we've got Ohio, at least those three states, Jack, looking at sort of banning large entities from owning. In one case, it was 1,000 plus houses, Jack, in California, which I'll get to in a second. But in another case, it was 10 in Minnesota. So, Jack, speak to quickly what the NRHC is, and I know you're a member. And then we can talk about sort of what they're looking at around the country for their members at legislation that could affect some of the large institutional members of this council.
Yes, the National Rental Home Council is a trade organization. We mentioned this on a previous episode as well, that was formed by the largest landlords back when there wasn't a trade organization. So whatever it was, 7-8 years ago. Mm-hmm. And I think, Invitation Homes, American Homes for Rent, they formed this trade organization so that there was some advocacy on behalf of single family rental operators. So they started with the biggest guys. They're kind of working their way down to Main Street. And I think the biggest issue that they have been focused on, frankly, mm-hmm. is this concept of the evil landlord, right? So the emergence of hedge funds and public REITs buying what was previously starter homes, right?
Sure.
That gets a lot of people's blood up, right? Because they're the argument is that they are driving up or they're another source of competition. As a result, they're driving up pricing for those entry-level homes. So they're making it harder for entry-level home buyers to buy their first home because mm-hmm. they're now competing with a cash buyer at the same price. And so there's a lot of politicians around the country that think that is bad for the fabric of neighborhoods, bad for America. And it's a very hotly contested topic. There was I think it was a 60 Minutes that hit piece, frankly, about a month ago.
Yep.
Where they had one of the executives from one of these large institutional owners on there, and he didn't realize it was a hit piece, but it turned into one.
Oh, it certainly did.
They were really painting him in a very negative light, and pushing this idea that institutional ownership of houses is bad for America. And so it's one of I would say that's probably the major issue, the most significant issue that NRHC is focused on combating. And they're having to combat it on both the national level. There was I believe in Biden's most recent budget proposal, there was one of the line items in there was that the interest that institutional owners of real estate wouldn't be able to deduct interest on their taxes. Mm-hmm. And while that didn't make it through, a politician wrote that in there. So NRHC is combating that both on the national level as well as on the state level, as we've seen in these legislative updates from the NRHC.
Yeah. So California, the Finance Committee of California Assembly will hold a hearing to consider AB 2584, a bill that bans companies from owning 1,000 or more homes nationwide from owning houses in California. Jack, they don't even have to own 1,000 in California. They have to own 1,000 nationwide to be banned from owning any additionals in California. One more, Jack. Minnesota House Bill 685, legislation banning corporate entity from owning more than 10 homes in the state, Jack, was excluded from both the House and Senate housing omnibus bills. So it doesn't look like it passed, but the bill is now has to advance to standalone legislation. And then let's see here.
Yeah, so that one in Minnesota didn't pass. Sorry, didn't make it. Basically didn't make it across the legislature. So unlikely that it's going to pass this time.
Right.
But the thing about these bills is they don't die, right? Like
No.
the philosophy behind the bill doesn't die. It's going to get reintroduced again next year, and it's going to get reintroduced again the year after that, and the year after that, and the year after that. And that's what we've seen as we've gotten a little bit more aware of politics in Maryland. Is that I pay attention to it not because not one, because I don't want to be surprised by what's coming down the pipe, but two, I want to be able to think about that from a multi-year planning point of view, right? Like if you pay it, I've found it very valuable, and I think it's something that not very many folks do, to actually pay attention to what the builders and landlord, in my case, multifamily landlord associations are fighting against.
Yep. Mm-hmm.
Even though they don't, because they win a lot, right, and get a lot of bills thrown out. But those bills come back the year after, and the year after, and the year after, and eventually some form of them gets passed. It has been my experience, right? Like the world is by and large moving slowly to the left, right? Like that's just, I think, a thing about society. And so you want to know what bill is going to get passed 5 years from now, pay attention to the trends of the bills that are failing right now, and make sure you're planning your business for what might be coming down the pipe. So
yeah, I think the mentality is they come out, shooting for the stars, and then they just, if it doesn't pass, they'll either find additional sponsors, they'll find additional lobbyists to fund, or they will just keep taking a bite at the apple to see where it can land. So Jack, it's a front and center issue. This target that these large institutional home buyers. And frankly, look, if you're listening to the podcast and you don't own 1,000 homes or 10,000 homes or $50,000 homes, that's fine. However, Dominion owns about 800, and I still think that there's a target on your back if bills like this pass. I mean, we're already talking about California that's saying you can't own 1,000 homes nationwide and buy another home in California. Yet in Minnesota, it's 10 houses. And there's plenty of people that listen to this podcast, Jack, who have 10 houses plus. And if you don't think that type of legislation can come to your blue state, what we're trying to suggest here is it might be time to wake up. And so, Jack, I was looking at an article this morning in the Wall Street Journal, just dated from a couple of days ago. And this is from Oakland, California. And the author of the article takes a bit of a contrarian view on how these bills would help homeowners. He actually believes that it'll exacerbate the issue. And it says, against the backdrop of national shortage of affordable housing, due in large part, Jack, to government policies, California lawmakers want to restrict corporate investment in single-family rentals. And so the conjecture here is that, he ends the thing by saying progressive California politicians say they want to restrict corporate investment into single-family rental markets because they think doing so would help everyday renters and homeowners. Because they think doing so would help everyday renters and home buyers. Instead, their proposals would force financial capital out of the market and reduce future stock of rental housing and increase rental prices. Well, look, if the idea of the country is that, by 2030 we'll own nothing and be happier for it, then and frankly, Jack, when you talk to younger, sort of millennials and younger, there's 40% of them. There's been polls that say that 40% of them have no desire to own a home. They see renting a home as the better option, and so I probably disagree with that. However, this guy is the author of this article is just saying that these types of laws will only exacerbate the problems for homeowners and renters. And I frankly don't agree.
Don't agree that what?
I don't necessarily have a problem with large institutional buyers owning thousands of houses, but I'm not so sure that prohibiting them from doing that exacerbates the housing crisis, the affordable housing crisis for Americans.
Oh, really? I'll take the other side of that.
All right, here we go.
I think that the author's point is that, and that I tend to agree with, is that restricting supply, like restricting or cutting off a source of capital, means that fewer houses are going to get built for those economic purposes. And the supply shortage that we have of housing, it doesn't matter. Like if you add a house for rent or add a house for sale, it's a place for someone to live. And so anything that is going to restrict capital coming into building more houses keeps the supply of housing down, and as a result, adversely affects affordability. And
But
so
are
what we
these
want is more houses being built by anybody, right? Like whoever can get their hands on land and building houses, like just do it. Put more housing supply into the market, because that'll make it more affordable for everyone. It'll because more increased supply of houses should drive prices down.
are these institutional landlords actually the ones that are funding are putting up the capital to buy houses, Jack? Or isn't it really, larger home builders who are selling essentially, sometimes wholesale or sometimes less than retail, we'll say, in larger lots? So I'm a home builder. I'm going to build 1,000 houses. And do I want to sell 500 of them quickly to one buyer, or do I want to sell 500 of them more slowly to individual home buyers? And so my question to you is, isn't it the case that these guys are not really putting up the capital to buy the houses? They just have the capital to buy the houses in bulk when they're being built.
Yeah, but when a build to rent buyer comes into the market and calls up DR Horton and says, "Hey, I want 1,000 houses there," DR Horton doesn't say, "All right, I'm going to take my I will argue that DR Horton doesn't say, "All right, that 1,000 houses that I was going to sell to homeowners, I'll sell it to this guy." He says, "You know what? I'm going to buy more farmland and I'm going to build 2,000 houses." And that's what we need. We need the builder to be more and more comfortable. We need all the builders to be the most comfortable that building that there is demand for all the houses that they could possibly build, and that they should pay more for land for farmers to sell it to them. They should hire more labor, buy more materials to build more houses, because they can both sell this 1,000 to individual homeowners, as well as sell another 1,000 to a build to rent institutional owner who puts an order in. And so I think the pie gets bigger in terms of the supply of houses when there is more demand for them. And given where affordability is, I think that that's just a net good thing.
Yeah. I mean, obviously,
it's a harder thing to see in the short term. Like in the short term, people just point to like, "Hey, look, a homeowner would have bought that house."
right.
But like, I think you got to zoom out to understand, to solve the problem. You got to zoom out and in my opinion, realize that more capital coming into this space should increase the number of houses. And given a fixed number of people, that'll improve affordability for everybody.
Home affordability is not just a problem here in the States. It's a problem in Canada. It's a problem really in the sort of the entire West. If you look across, many different countries,
Europe, all of Europe. Yeah.
all of Europe. And so I don't know if, and by the way, it's not, and as a phenomenon for build to rent and institutional home buyers, that's not only happening in America either. And so if we obviously have constrained supply, and I don't think that's just COVID related, but if you look at sort of the trend of, at one point we were building 3 million houses a year. I think we'll be just over 1 million this year, Jack. And so, I don't see how the institutional buyers coming in, buying in bulk, has done anything to lower home prices and make things easier for, average Americans who want to buy that first home. I can understand where they're putting more rentals on the market, but I don't see how it benefits homeowners or home buyers.
I hear what you're saying. I get it in the short term. I guess my hope though, or my expectation though, is that the national builders should be increasing starts, right? Like that's what we want to see. We want to see more starts
Sure.
of single family houses.
Sure.
And I think that build to rent orders contribute to builder confidence to do more starts. And so on any given house, yeah, it looks like competition on a micro level, but I think that since it encourages more starts, it is ultimately there is a net effect on the whole housing market that is positive for affordability. And
I don't.
without the build to rent bid, my argument is without the build to rent bid, housing prices would be even higher than they are today. Obviously, that's not something that you can prove, right? Like that's just like an economist's argument, but like I think that's true.
Yeah, I think it's an issue that doesn't go away anytime soon. In fact, I think it only gains more spotlight over the next few years, because Jack, I just think that Wall Street is here to stay in the single family market. And so I think folks should absolutely keep an eye on it, not only at your micro level, but at your macro level as well.
Yeah, by the way, just to contextualize this, like the institutional amount of ownership is still less than 5%. Like of the single family rental properties owned in America, those who own more than 1,000 only own less than 5% of those. So like it gets the most press, right? Because it's like easy to pick on. It's like great fodder for politicians. And it moves, and it does, by the way, it does move certain markets. Like in certain counties and outside of Atlanta, like, yes, they're 30% of the market in those counties. Yep. But as a nation, it's less than 5. Well, but I do respect the fact that like in certain markets, they do move the market. That's fair.
Let's have a quick 2 minutes and then we'll wrap up this quick hit on, Jack, I still maintain that the DSCR loans that we do are an awesome product. We basically took, what a local bank has been doing traditionally for decades for real estate investors, right? Well, I've got a house. I had a hard money loan on it. I'm going to turn that into a buy and hold, and I need some sort of long-term financing. I would walk into my local bank. They would probably give me some sort of investor grade loan. It would probably be maybe 1.5% above what I would pay as a retail, 30-year mortgage. But it would more than likely have been a 20-year mortgage with like a 5 to 7 year call. Mm-hmm. And I think that's probably still the case today. Wouldn't you say, if you walked into your local bank, Jack?
Yeah, 25-year AM, 10-year term, 5 years of fixed rate interest with a reset after 5 was like the classic consumer bank product.
And they would have taken that stuff all day long. However, several years ago, Wall Street decides that that's an interesting space to be in. And so they developed what we call the DSCR product, right, Jack?
Mm-hmm.
All right. My conjecture is, if you really wanted to own a lot of houses, why not be the bank?
Oh, my gosh.
Come on, yeah. Oh, it's crazy to think, Craig, you must be out of your mind, because we didn't live through 2008 when there was a massive amount of foreclosures and banks were taking back properties at a pace that like someone lost the recipe. And I'm just going to, so if you don't think that could happen again, Jack, let's play a game. I'll play one side, you can play the other. Let's just say there's a significant downturn in the economy. We'll stipulate, let's have fun. Significant downturn in the economy. I'll pick one, Blackstone, and I own, what if you had to guess, Jack, how much paper do you think they own on 30-year DSCR notes right now in terms of money?
Oh, it's tens of billions.
Tens of billions of dollars, which represents hundreds of thousands of houses in the United States, correct?
Yeah.
That would be an interesting way to gain more property.
I hear what you're saying. They're taking a 70% loan to value position in that real estate, right? It's below market.
Yeah.
The underwriting is light, right? It's based off of the income. So if you can operate that property well, you're good. It's a nice loan, and they make a nice return. If you can't operate that property well, your lender gets to foreclose at 70% of value. I hear what you're saying. I hear where you're going with this.
Okay. So look, man, I mean, the owners, the CEOs of these companies, and I have nothing against them, Jack. I mean, if it's a business model, it's a business model. However, when they all show up to Davos and they say, we're going to own nothing and like it by 2030, this would be an interesting way of owning a lot of assets in a hurry.
I mean, I actually like the theory, because it's like devilishly brilliant, right? Like your question is DSCR just loan to own for Wall Street? Like, let's make the underwriting light. Let's make the attachment point attractive. There are a bunch of investors. So if they go south, it's not like we're kicking homeowners out. Like, it's just a bunch of investors who took business purpose loans. So fuck them. But I hear where you're going with that. It's not, the vast majority of this paper is landing on right now insurance company balance sheets. It's not like Blackstone owns it.
Well, let me stop you there. Let me stop you there if I might. In what world 10 years ago, Jack, 12 years ago, 15 years ago, would you have ever said to me, hey, Craig, it's funny. All of a sudden, the largest insurance companies in America, who always, Jack, have traditionally owned A-class assets, have they not?
Yeah. Yes.
Okay.
Yes.
Now, Craig, they're really interested in owning crappy houses in post-industrial cities in America, Jack. And I don't understand that model at all. I don't get it.
I'm gonna just add fuel to your fire. I wasn't intending to like feed the conspiracy theory here, but so and by the way, the insurance companies are vehicles that are owned by, like, Pretium is one of the biggest. They're a humongous asset manager. You never heard of them, but they own tons of stuff, and they both own tens of thousands of houses in a subsidiary, as well as the insurance company, because they're a money manager. So they also have an insurance company vehicle that, writes life insurance annuities and then buys DSCR loans. So yes, like if they end up foreclosing on that, they do have a sister company. Pretium does own a sister company that owns a lot of houses. You're not wrong about that. If that's by design, I kind of like that's could be smart. That might have been brilliant.
It's a good way to go from 1,000 houses to 50,000 overnight.
I hear you, man.
And so,
that's an interesting theory.
We'll wrap it there, Jack. And I always love to play this sort of like the what if game and this sort of, looking into the future. I'd be interested. We'll wrap this episode here. Thanks for listening, folks. Real Investor Radio. Hope you enjoyed it. Love to hear your comments on this or anything else. I'm Craig Fear with Jack Beer. Thanks for tuning in.